The stock market explosion is imminent.
Themselves up to get absolutely obliterated. And I mean absolutely obliterated like you wouldn't believe. And I'm going to show you new data that's come out here just in the past 24 hours on basically a move a lot of investors have made that is not going to work out well at all and is going to they're going to get obliterated. I'm going to explain to you exactly how this is going to work, how the market's going to transform from here. And so we'll talk a little market at the beginning of this video here today on the reaction channel. Okay. From there, I want to react to 4 video clips. This is going to be a beast video here today. This is going to be a beast video. They had some heavy hitters on CNBC here today. Tom Lee went on talking about the market. Then we had Ron Barron, legendary investor. Ron Barron, go on CNBC as well. Looking forward to reacting to that one. They had Bryn Talkington on this show, Fast Money Halftime Report. Okay. Talking about NVIDIA, Tesla, buying some of these sorts of stocks. Joe Terranova talking about buying Amazon. I want to speak about Mag 7 stocks. Does it make sense to buy these, not buy these stocks? Do they have an opportunity to perform great this year or not? Are they a lost cause? So we'll get into that. And then last one I want to react to here is S&P 500 at 6,500 is still our base case for the end of the year, says Citibank. So looking forward to reacting to that one, sharing my opinions and perspectives there. Busy, action-packed time. I hope you guys enjoy me keeping you guys up to date with everything going on out there. All I need from you, one thing only, for you to smash that thumbs up button for me. Hit the like button on this video. It's all I need from you guys. I appreciate y'all for doing that. If you want to subscribe here, you can certainly subscribe here now. How many subscribers do we even have on the channel? I think it's like, it's over 80,000. Okay, that's all I'll say. So I appreciate all you guys here on the reaction channel. Okay, so getting started here right off the top. It's very important we start right here. The Russell 2000 as of this morning, it's almost in crash territory. It was down well over 18% from the recent high. So that would be categorized. I would categorize that as a major correction, not a minor correction. That's a major correction in the Russell 2000 we've seen over the past few months here. Almost a crash, not quite there, right? But if you got this baby down a few more percent, we'd enter actual crash territory on the Russell 2000. So pretty ugly, right? And then as far as the NASDAQ goes, as of this morning, NASDAQ down about 14%, which I would categorize that as a major correction for the NASDAQ now at this point in time. Now, S&P 500 as of this morning was down a little over 9%. So we're almost into major correction territory with S&P 500, but that is still in minor correction territory. Anything less than a 10% drop is minor correction, okay? Now, if you look here, this has gotten very interesting. The last stock that's really been holding up decent is it's fallen. Apple trading 220 this morning, and that was a stock that just back on February 24th, so 2 weeks ago, that stock was $247 a share. So we have lost Apple now at this point in time, and that was the one stock that was actually holding up decent, right? NVIDIA was getting hammered, Tesla, Meta was starting to fall, all those stocks, and Apple was the one holding up. Not anymore. Housing stocks continue to get hit, right? Look at Enphase here today, down another 5+%. That one's been trading even in the 50s here recently. Whirlpool getting hit again. Or H getting hit again. So all the housing related stocks continue to get hit. And to be quite frank, those ones might continue to be in a tough place for quite some time, right? We're obviously getting news like this. Airline CEOs warn domestic travel, which is a fancy way of saying USA travel. Demand is slowing. Delta, American, Southwest have cut their first quarter forecast. Government travel has also slowed, executives said. So obviously Delta, American Airlines stocks like that getting hammered here today. And listen, that leads perfectly into recession, right? I mean, at the end of the day, if airlines say, hey, demand's not there, people start getting real freaked out real fast about recession, right? And so very, very natural for that to happen. I posted this. I'm not sure if you guys follow me on X. I always have my X and my Instagram linked in the description area. Not sure if you guys follow me on X or not, but I posted this one just a couple hours ago. I said stock market crashes usually last 300 days. Now, we might not be in a stock market crash right now. This must be a correction, right? And I'll show you how long corrections last here in just a moment. But let's say we actually have entered into a stock market crash, which once again is very debatable. But if that does happen, you could say we got many months of just a kind of an overall downward move. Now, in stock market crashes doesn't mean the stock market goes down every single day or every single month or every single week, but the gist of it is it goes down and down over a given period of time, right? So I posted that, but the more likely probability, the higher probability here is we're not in a stock market crash right now. We're in a stock market correction right now, right? So how long is...
Either way, let's look at a couple of these points here. Let me make this a bit bigger. So first point I want to point out is 2022. This literally happened the very last day of 2021 and 10 months through 2022. 287 days that it took to make that back up. Now, let's go back. 1957, 400 days. 1962, 200 days. You get the deal, right? Only COVID, and then this blip right here in 2009. That was before, that was a little bit before I started trading. I don't even remember what happened right then. Oh wait, that was that sell-off in the global financial crisis, right? It seems to have happened twice. Like you had it. Okay, that's why I didn't understand what that was. So October 2008, and then again in January 2009, right after that. Interesting to look at here. Most of these you can see are several hundred days. And so let's break that down. If it means that there are several hundred days during any of these corrections, to me that says I'm not ready to buy the dip until we are past the halfway point of that dip. Right? Let's use a couple examples here. Let's do 2008. Let's do 2008. So October 2007 to November 2008. Can we do the SPY that far back? And then let's switch to monthly candles. Let's go back to 2008. Yeah, cool. We do have data for that. Excellent. Okay, so this is the big crash that happened in 2008, and apparently it happened again right at during 2009. I mean, this little blip right here doesn't even show when you look at the monthly candles, so I'm not even sure what that was about. Either way, here we go. On the way down, top to bottom, a 57% sell-off, right? That took a year and 5 months to reach from the top to the absolute bottom. And then if we're looking at it right here, remember these are monthly candles, not daily candles. Where would be the time to get in, right? There were people calling and saying the dip is done, probably right there on those couple of green months. Those couple of green months, people were probably saying the dip is over, but then it happened to go down quite a bit more. Now, again, these are monthly candles, but you can apply the same outlier trend template to any time frame, daily, 5-minute, monthly, whatever, it doesn't matter. Your 10 being over the 20, price over the 50 shows a bull market. And that happened from 2003, December 2003, until when? We could say right here is when it changed, 2008. So you could have gone 5 years without making a single trade if you're following the monthly candles with the outlier trend template. 5 years. And then you don't have to hold it all the way down, but you could get back in. Let's say you got back in 10 over 20 right there. Right, let's say you got in right here and then you immediately got stopped back out. Remember, these are monthly candles. That's okay. Like I say all the time, you might make a buck, you might lose a buck here and there. But the next time it pops back over on this side, looks like it ran for a good minute. Yep, for a good minute. For sure, for a good minute. Yeah, exactly. So my point here is that while people were screaming to buy the dip here on these 2 green candles, and then it still went down 52% from that point, you could have got in over here. Okay. You could have got in over here on this side of the dip. You wait for the 10, 20, 50, even on the monthly chart, it's still the same math. You could have got in, you might have lost a buck here. I'll give you that. You might have lost a buck right there, but here could have absolutely done really well. So you would be up from this candle to here, 15%. This is why it's so important when you buy the dip to wait until the other side. 15%. You would be up 15% when these people who are buying the dip are just getting back to break even. And let's say that they were dollar cost averaging all the way down, right? They were losing all the way down. Did they lower their average basis price? Yeah, for sure. But during those 10 months, during this time right here, how many sleepless nights do you think they had? How many times did their wife look at them and say, "You're such an idiot. Why would you buy right now when the prices are going down?" Right? This is buying a neighborhood that's full of crack houses. This is buying an up and coming, growing neighborhood that just put in a Home Depot around the corner. If you want to think of it in asset terms, you want to be buying the asset as it's going up, not buying the asset as it's going down. Because when you're buying it as it's going up, money's a lot easier. And easier money is so much better than stressful praying and hoping money. And then again, you're up 15% before this one trade, before this one spot is even at break even. So I wanted to point that out. And I've done it a couple times with COVID, doing it another time in 2008, 2009. Why? Why do I do that? Because the principles are timeless. The principles do not change. All of this is math. Math has been around since the Egyptians, okay? If they could put these giant ass pyramids together and make them perfectly square, I'm pretty sure that you can throw 3 moving averages on your chart and then say, oh, you know what? Maybe the math is saying that prices are going down versus maybe the math is saying that prices are going up. And I am only buying when prices are going up. I'm looking to sell when prices are going down. But I'm only buying anything if prices are going up. Because at the end of the day, it doesn't matter how great the market is. Only price pays. Only price pays. Let's continue on with the video here. Remember, I'm running this at 1.5 speed so we can try and get through as much as we can.
Do stock market corrections last? Well, stock market corrections are pretty darn quick. The average fall in a correction is 14.1%. Okay. Now, And you can say the NASDAQ already hit that basically today. So S&P 500 is still, about 5 percentage points away or so, right? Now, the average recovery time takes only 4 minutes from a correction. Once again, we're likely in a correction. There's no guarantee. Maybe we're going to be in a crash, but much higher probability is, I would say 80% probability we're in a correction right now, 20% probability we're in a crash. So in the 80% probability camp, like this correction's probably about over now at this point in time, or ending very, very shortly here. If it's not over now, then it's going to be ending very, very shortly. And essentially we'll recover strong over the next 4 months, essentially. So do keep that in mind, right?
So don't be so quick. Don't be so quick. I mean, that chart he showed just a moment ago was showing how many hundreds of days all these corrections lasted. Don't be so quick to buy into anything. There was a couple things like Alan says, I can't wait 5 years. I can wait 5 years. But in the process, you can make all kinds of gains on the way down. You can make all kinds of gains short selling. And then when it starts going back up, you can make all kinds of gains on the way back up. But you don't have to hold it across that level line right there, right? To that point, you don't have to wait from May of 2008 until May of 2012. You don't have to wait this entire time to get back to break even. No way. Do not have to do that.
Now, this is where things get really fascinating and really scary. And I mean really scary. Check this out. This just came out 15 hours ago. Total U.S. put option volume just hit the highest level on record, according to Zero Hedge. Shorts are going all in. All in. Oh, boy. Oh, boy. They just loaded the boat on put options. Oh, my gosh. Woo! You want to talk about getting set up to get wrecked? Oh, my gosh. Okay. So now for these individuals, you got to understand, everybody load.
I think that's a great point. I think a lot of people are thinking they're geniuses right now, and they're buying puts at record pace. What are we doing as outliers? Well, by following the market breadth, I've been telling you that I believe we might have bottomed out. And I've been telling you this for a couple days at this point, a few days at this point. I believe we might have hit a short-term bottom and looking at a bounce. So while retail is FOMO-ing into puts, they're too late, right? They're too late. And isn't it interesting that all you got to do is look at one area inside of outlier right here, market breadth, and you can see, oh yeah, maybe I should have started being short back here when the breadth started showing more and more put volume. I'm sorry, more and more sell signals, I should say. And now I believe we're about to have a lot of short covering, which could lead to a lot of short squeezes. I know a lot of people like to look at short squeezes. So just putting that out there.
Loading up highest volume, highest level on record. People loading up on put options yesterday. I'm sure they were loading up on put options this morning as well. Have you seen the VIX? The VIX is very high. It's the highest we've seen in a long, long time, which means all these people buying put options yesterday and today are all buying them and likely having to pay insane premiums, which means now these individuals need a full-on stock market crash to make any money.
This is so true. So far, I can't discount anything that Jeremy's saying so far.
This correction is not going to be enough because of how much they're going to have to pay on premiums. So now, if hypothetically, over the next month, over the next few months, for the remainder of this year, let's say the stock market doesn't go down, and let's just say the stock market's flat. These individuals are going to lose 100% of what they just put into those put options. 100%. Not like, oh, they go down, you buy stock, you buy, Apple stock, right? And stock price goes down, short-term correction in the market, crash in the market, whatever. You go down 20%, 30%, 40%, 50%. Okay, as long as Apple does their business on a high level over the next few years, like you'll get the money back, right? And then some. On these put options, if it doesn't go your way, you lose 100% and you can't get the money back. There's no recovery time. So all these people load up on put options that are going to expire next month, 3 months out, 6 months out, 9 months out, right? If the market doesn't crash in the next few months, they're going to lose 100% of what they just put in. That's what we call getting real wrecked in this game. There's only a few ways you can get wrecked in the stock market, right? And two of the main ones I've seen people get wrecked in is one, they go margin. So it means they're taking out debt.
This is a rare occasion. Jeremy is actually talking sense. This is a very rare occasion. We'll see if he keeps it on.
To basically invest even more money or trade with even more money. That's how you get wrecked. And the other is you load the boat on put options or call options, thinking the market's going to continue to go away it's going, and then you get wrecked and you lose 100%. So these people have to have a stock market crash. They don't have a stock market crash. They're wrecked because the premiums they had to pay yesterday, astronomically high, and same thing with this morning, astronomically high. Now, to make matters even worse, I could show you what happened in 2018. 2018, there's a lot of similarities between what's going on this year and what happened in 2018. A lot of similarities, right? But in 2018, early in the year, people thought oh, we're gonna have a crash, right? Because the market sank rapidly at the very beginning of 2018, and people are like, oh man, we're gonna crash. The market's just entered a crash phase, right? And then the market came back extremely strong. People are like, whoa, what the heck? Shoot, we were wrong about that. And then it fell really rapidly again. And then people came out and like started buying puts. They're like, told you, I knew this market was going to tank. Boom, here we go, baby, big crash incoming. And it didn't come. And you know what happened? The market raced to all-time highs over the spring and summertime. And those people that were loaded up on short positions and put options when the market was sinking, I think we're about to go into a full-scale crash because Trump is doing tariffs and blah, 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 and Trump did this and Trump said that and Trump. And what happened? They got a pie in their face. All-time highs in the market, right? Oh my gosh. And then we actually did have an almost crash at the end of 2020, or at the end of 2018. It was an almost crash. It was a major, severe correction in the market we had at the end of the year. But in the meantime, all these people that loaded up on puts and short positions thinking we're about to have the crash just absolutely got obliterated over that spring and summertime.
I mean, they got, what is that technical term? I don't, what is the technical term for when you get obliterated? Oh yeah. They got monkey hammered, right? And that's a lot of it has to do with risk, right? Understanding the risk that you put on. If you are buying an option, buying a deep in the money option, which is the way that I trade, this is a leveraged investment. Buying an out of the money option is a lottery ticket, right? They're very different scope just based on the strike price there.
And who's to say that's not going to happen this year? Who's to say that's not going to happen, right? Listen, what do I always tell you guys? The biggest...
Wait, no, Jeremy didn't say that. I say that. Every stock is bad, and every once in a while it acts right. Did he say that? No way.
The biggest companies in the stock market, right? The biggest companies in the stock market are the ones that are the big tech companies, right? The ones that matter most. Are their earnings going to magically just completely fall apart? Is that going to happen? I don't think there's a very high probability of that, right? And so their earnings are probably going to be fine over the next few quarters, right? They already kind of sandbag guidance a little bit. And so if you're hoping like Meta's earnings just tank and Amazon and Nvidia and all those companies, it's always a possibility, but I'd call it pretty low probability, right? And so that's going to come out. Tariff situation's probably already at max fear, just to be quite frank. Like I can't see it getting much worse in regards to tariff fear specifically, right? And all this Trump drama, like I feel like we got a lot of Trump drama going on right now, like a lot. And I feel like if anything, that's going to subside over the next few months. And so all of a sudden people start looking out there and saying, okay, wait a minute, we got all freaked out. Trump was this, Trump was that, Trump, Elon, Trump. Oh my gosh, what did we do? We went all heavy on puts and we sold out of everything. What did we do? That's what happens. That's exactly what happened in 2018. People are like, whoa, crap, think we screwed up here, right? Now the Fed, with all this drama going on that we have right now, let's be very clear, we could have more cuts coming. We could very well have a lot more cuts coming. And that's a little different than 2018. In 2018, you had a Federal Reserve that was, kind of hell-bent on raising interest rates. They thought they were behind the curve. They wanted to raise interest rates. Now we've got a Fed that's actually got our back. And so if there's a lot more drama, a lot more market volatility, a lot more fear about recession, right? Some bad jobs numbers come out over this next couple months. Fed's going to be much more ready to cut for the remainder of this year. And you could see several 50 basis point cuts this year. No guarantee, but don't be surprised with all this market drama, with all the worries, what's going on. And honestly, that's Trump's plan. Like, I don't think people understand what Trump's actually up to here. He's up to a few things, but the main thing he actually wants to have happen is for the Federal Reserve to start lowering interest rates. He wants to see yields fall across the board when it comes to treasuries, across the board. And that means the Fed funds rate, that means the 10-year yield, the 2-year, he wants it all going down, okay? All going down, especially the 10-year, in my opinion. And so how do you get that? Get a lot of fear out there, get, inflation numbers down further, right? And ultimately get interest rates down. Now, despite everything that's going on out there here today, public count, nicely green. It's been a nice green day for the public count, even with all the drama that's going on out there. Now, let me show you a message I posted for the private stock group members, because I saw sentiment. I still read through comments section on my videos, whether it's this channel or the other channel. I don't obviously get to see all the comments because there's a lot, right? Channels are fortunate to have a lot of subscribers, so there's a lot of comments. But I try to look through them and see a decent amount to get a gist of kind of, how people are thinking, how people are feeling out there and whatnot. A lot of people talking about selling my stocks. I just sold my stocks here today. A lot of that sort of talk. A lot of.
And on that exact point, right, the time to sell out of these was actually a while ago, right? Actually a while ago. I mean, you could have even sold out back up here, February 27th. So maybe 3 weeks or so ago, that was the time to close. And so I've seen a lot of people in the comments, and maybe you've been one of them too. It's like, well, do I close now? Right? What if you were holding SoFi? Do I close SoFi now after it's gone down? Let's say if I close to under the 10 EMA, should I close it now after it's down 28%? Let's look at SMCI. That one's not exactly what I'm trying to find. Let's see. Oh, here we go. PayPal. Remove all annotations here. Should I close PayPal now after it closed under its 10 EMA way up here and it's down 21%. Should I close Meta now after it's closed under its 10 EMA right here and it's down 15%, right? If you're going to be in the market, you need to know where you are going to close. I can't tell you where to close. I have my own strategy and I know it works. You could just follow some of the outlier signals, right? There's lots of signals that come through every day for buys and sells. Maybe that's what you want to do. But nobody's sitting there holding in your hand saying, now's the time to get out. And if you are looking at a situation like this, where you're like, oh man, I'm down 15% in Meta. I'm down, where would this be? A close under the 10 was up here. I'm down 20% in NVIDIA. Let's look at something like HIMS, this huge run up. Let me remove my annotations here, make it a little easier on you. Goes under the 10 right here. Oh man, I'm down 30% in HIMS. Maybe you were in Celsius. Maybe you were in Celsius and you saw it bounce right back up, right? This is probably, well, okay, I see one in the chat, Mara. Right? Down how far? Since the last time it closed above its 10 moving average. I'll even give you the fact that the moving averages were crossed down already. The last time it was above its 10 EMA and then closed back down. We'll call it right there. To today, down 28%, right? If you're going to be in the market, you need to take responsibility of where you are going to get out. Exit signals are infinitely more important than entry signals. Are they as exciting? No, they're not as exciting. But they are infinitely more important because they will determine if you keep your gains, like this 120% up move in Tesla, that is now 100% gone. Having your exit strategy in place, your trailing stop, whatever that is, finding where that is, which the 10 crossing over, the last time that happened was right here, this circled line. So that would have been a great exit signal. But then, if you look at the very last time it was above its 10 EMA, looks like close above the 10 EMA. It looks like right here, above its 10-day moving average. And these aren't magical, okay? There's no superstition around these. It's just math. You would have saved 45% on this down move. 45%. And now, just now, people are saying, oh, maybe it's time to close. If you're in the market, you need to know precisely where you're going to get out. Precisely. Have a plan in place with no doubt, hands down whatsoever, where you will get out. Sometimes you get out with a win. Sometimes you get out with a loss. We can look at Neo for Brett right there. Brett's probably sitting on the toilet right now. He said that's when he likes to watch. You could look at a stock like Neo, which is really choppy, by the way. And you could say, oh, man, if only I had listened to Chris and got out on the first close under the 10 or even under the 20 or even under the 50, just think of how much more money I would have in my account today. Just think of how much more money I'd have in my account today. So that's what I'm trying to get across here, is that you need to know where you're going to get out. And it's at these points in time where you see the put buying is super high, to Jeremy's point, which is ironic. Where you see the put buying super high, where you see there's I forget the story. I think it's in one of the Market Wizards books or in Trend Following, one of the two. But there's a story about a guy, one of the Market Wizards, I believe, gets into a taxi, and the guy driving the taxi starts giving market advice, right? Starts giving him stock tips to the Market Wizard. So the taxi driver, he's like, "Where are you going?" He's like, 43rd Street." So he's going down 43rd, and the taxi driver's like, "Oh, have you bought any Tesla lately?" And the guy sitting in the back seat, he's like, "No, why?" And of course, the taxi driver's like, "Well, don't you know it's going up? Don't you know it's going up?" When you see those type of situations, that's the top. I'll give you another personal example. My dad, who's watching, hey dad, you remember when you called and told me that Aunt Gay had closed all of her stocks? This was a few years ago. And I was like, well, there's the bottom. And you're like, what do you mean? I was like, when people start bragging about how smart they are about closing their positions, that's the bottom. Or how smart they are about buying puts, that's the bottom. And it's super ironic that it happens to coincide with this order block. Super ironic that it happens to coincide with the market breadth turning bullish. And in my opinion, not a surprise. Not a surprise at all. Not a surprise at all. When investor sentiment gets too far skewed one way or another, look for that snapback. We talk about it all the time. When the market gets really greedy or really fearful, what happens next? It snaps back. Think of it like a rubber band. You can measure that inside of Outlier. It makes it really easy. So I think that was a great example. And I'm not at all ready for what we're about to do, ranking this video. By the way, let me introduce myself. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, I want you to subscribe if you haven't already, of course, and let's rank this video. So, where are we ranking this video here? For me, this is a bit of a shock. Dr. J throws a 0. I wouldn't actually throw the 0 because at least this far into the video, like I say, I played it at 1.5 speed and we only got 13 minutes in. And this is a 47-minute long video. Ain't nobody got time for that. Manny says 6. I hate to admit it. And that's kind of where I'm at too. 6. I hate to admit it. That's exactly what my thought is. Lars says 2. Vincent a 5. Sarah, good to see you, Sarah, a 6. Carol, Neo's rising or heading down next. We can look at that in a minute. Rick says a 8. Golden Oldie a 6, a 5, a 6, an 8, 5.8, 5, 4, 6, 6. For him, very impressive. I see where you got the 8 from. For him, very impressive. Mikey Mike says it's a 4 and at 1.5 speed. I'm sorry, dude. I'm trying to get through as much as we can. Give me a break. I watch all of YouTube at 1.5 speed. 7. I knew somebody was going to do it. I was actually like combing through it. I'm like, who's going to say it? Who's going to say it first? Bellows 30. You're bounced, my friend. Blocked forever. Nobody gets a 7. And Bellows never gets to ever comment on us again. I'm just joking. Nobody gets a 7. Nobody. Brett from the toilet. From the porcelain throne. 6. So yeah, that's actually what I'm thinking too. I do see a question here. New member to Outlier. Excited. Glad to have you here. Just wondering, why doesn't Outlier have market breadth for the defense sector? We do have it for all the sectors. In fact, since you brought it up, let's look real quick. If you want to change the market breadth for different sectors, just come up here. Defense sector. Let's work on the term for defense sector. So Raytheon, Lockheed Martin, Northrop Grumman, they would be in the industrial sector. So these are the 11 official sectors, right? If there's a term for that, there are 7 official sectors. And so those kind of guys would be in the industrials. However, defensive plays would be in the staple sector. That would be like Coke, Walmart, Dollar General, things like that. I believe all of those are in the staples sector. So I assume you mean defense, meaning like defense contractors, and that would be in the industrial sector. And if we come over here, we can see that it also has this bullish market breadth cross right now as well. So great question. But yeah, Golden Ellie says, yeah, it's under the industrials for sure. I'm glad I'm not the only one who watches at 1.5 to 2. Dude, I can't watch anything at 1x speed. If something's on at 1x speed, like I tried last night to watch Amazon Prime. I tried to watch Clarkson's Farm, by the way. I love Clarkson's Farm. I think Jeremy Clarkson is hilarious. And I've been watching some of Clarkson's Farm here and there. I don't watch a lot of TV. But it was at 1 speed. I was watching on my phone and I was like, I can't do this. I can't sit here at 1 speed and watch this. So I bounced actually really quickly. So yeah, there's your ADHD fact of the day. But I am also going to rank this as 6. Let me get a screen cap for it real quick. But while I get that screen cap, I want you to go over to my YouTube channel and let me pull this up here. We got a poll. Got a new poll of the day. I want to get your opinion. Poll is: people who succeed in the stock market also accept periodic losses, setbacks, and unexpected events. What do you think? Well, it seems like several of you have voted already, but winners take losses or only losers take losses? Winners take losses or only losers take losses? I would actually think Jeremy goes down into this camp right here. I bet he spends a lot of time saying how AMD is going to go up forever. And if he has to admit that he's wrong, he'd feel like a loser. But don't let me cloud your judgment. You go and vote on that real quick. But let me get that screen cap of that video over here. There's Tom Nash. Screen cap of the video right there. And let's drop it in here. So, of course, go vote on that. We're going to rank this. I liked it as a 6. It was actually decent, which is crazy to hear. Now, if you want to save time, make money, and start winning with less risk, like outliers like us, I'd encourage you to go over to outlier.com to get the annual pass, which is just 82 cents a day, and you'll save 64% off the regular monthly price. And if you're already on the monthly plan, you want to upgrade, just shoot us an email, and we'll take care of it from there. So now it's time. Put your stocks in the chat. Let's go. I want to see what stocks you are looking at today. And we'll start with, Tom Nash is calling traders degenerate gamblers. I can't wait until Tom Nash and I have a show together, because there's going to be a lot of moments where I can stock slap him, if you want to call it that. I can stock slap him and say, you know what, Tom? You don't have to hold Tesla all the way down, my friend. You really don't. And if you're not selling it because you don't want to pay taxes, I'm afraid to tell you something. I would rather pay taxes on my gains than not have gains and be down 45%. Just putting that out there. All right. Nico wants to look at MSCI. Let me close a couple tabs here. And let's start with MSCI for Nico. Oh, by the way, thank you for putting this. I do want you to put in long or short. From now on until the end of time, put in your stock long, your stock short. That's what I want to know. It really helps him. It really helps out. Yes, stock slap him. I was going to say something else. You know what I'm trying to say. But I think from now on, I will call that stock slapping. All right. MSCI. Let me make this a bit bigger. Getting definitely down into the... Oh, we changed our default view. Awesome. I didn't realize that. The default view has gone from max to 1 year, so I should be able to zoom in even faster too. Let's go. That's a nice upgrade. Okay. So the fear is getting a bit tough on this one in both the financial sector and in the fear and greed. Oh, we got our new fear and greed readings. Okay, this upgrade was pushed right now. This is the first time I've seen it. So check it out. One thing that we wanted to do is make it simpler. So now the fear and greed goes from 0 to 100. So right here, this maxed out here at 76. And let me see if I can go back here. This maxed out its fear at 16. Awesome. Okay, I knew that was coming. It's great to see that. So this fear value was at 34. So 34 out of 100 is where it was at right there. And you can see on the financial sector, oh, we don't have the reading on that yet. I know I had asked Mahesh for that upgrade. Don't quite see that yet, but it's definitely getting more fearful. Awesome. I'm excited to see these upgrades coming through. And as you can tell, we are constantly upgrading Outlier to make it even better. Yeah, MSCI, you've got your 10, 20, 50 pointing south. Hopefully you're looking at it for a short. You got a couple conflicting signals here. The sector is a bit weak, while the stock itself is strong. And I want you to always remember this. 40% of the move of any stock is due to the market. 30% of the stock's move is due to the stock itself. But the other 30% is due to the sector. So when you combine the market and the sector together, and then the stock is moving higher, it's like a slingshot. But in the meantime, it can be difficult. It can be difficult. And Lockheed Martin might be having a little bit of difficulty there. So let's go back. Let's see how y'all voted on this poll. I want to see this real quick. Let's see how y'all voted on this poll. So yeah, winners take losses. I agree. Winners take losses. The only way you stay in this game is to take losses. Now, what do I mean by the only way to stay in this game is to take losses? Be sure to tell me in the chat what you're trading, and of course, come back tomorrow, where outliers like us will save time, make money, and start winning with less risk together as a team. Now, real quick programming note, I will be out a little early today, so we're going to move up the afternoon live stream by an hour. I hope you can make it. I hope I can see you there, and I hope you click one of the recommended videos that YouTube's popping up right now, and I'll see you this afternoon. We'll talk soon.